Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Waste Management Inc. Quarterly Report. Waste Management Inc. provides a wide range of environmental solutions to various customers across the globe. The company's services include collection services for waste and recyclable materials, transfer station operations, landfill gas-to-energy facilities that produce renewable electricity and natural gas materials, processing and commodities recycling services, cardboard, paper, glass, metals, plastics, etc., recycling brokerage services, strategic business solutions, food and yard waste collection, mulch, compost, soil amendments, and renewable energy sales, remediation and construction waste services, industrial waste management, fly ash management and marketing, regulated waste and compliance services, RWCS, secure information destruction, SID services. The stock price of Waste Management Inc. WM has dropped by approximately -7.17% over the past year due to several key events and financial results. A significant contributor was the Q3 2025 earnings miss, where adjusted earnings per share fell short of estimates and revenue also missed expectations. The acquisition of Stericycle in November 2024 increased Waste Management's net debt, potentially raising concerns among investors. Additionally, the company reported an EPS miss and a revenue miss for Q4 2024. Broader industry trends have also affected the stock price, with rising costs, lower prices for recycled materials, and heavy investment requirements weighing on margins and growth. These factors collectively contributed to Waste Management's underperformance in the past year. The primary drivers of revenue growth or decline can be summarized into two main categories: expansion and contraction. Revenue growth is primarily driven by the acquisition of Stericycle, expansion into new markets, and increased landfill volumes. Strategic acquisitions and improved efficiency have also contributed to revenue growth. Additionally, elevated special waste volume in West Tier due to wildfire cleanup activities has boosted revenue. On the other hand, revenue decline is mainly attributed to volatility in commodity prices, divestitures, and foreign currency translation. The significant deterioration of market pricing and demand for post-consumer plastics has also led to a decline in revenue. Furthermore, supply chain disruption and delayed project development have disrupted customers' businesses, resulting in decreased revenue. Overall, the company's revenue growth is driven by strategic expansion and acquisitions, while revenue decline is primarily due to external factors such as commodity price volatility and market demand fluctuations. Net income and profit margins decline. A shift in company performance. The company's net income experienced a significant decline between 2024 and 2025. The net income decreased by $157 million, from $760 million to $603 million, indicating a downward trend. Furthermore, the net loss of $510 million in 2025 contributed to this decline. Profit margins also suffered a substantial decrease, dropping from 20% to 15.3%. This reduction can be attributed to increased expenses such as depreciation, depletion, and amortization, which rose by $478 million, and provision for bad debts, which increased by $24 million. These factors likely played a significant role in the decline of profit margins. The decrease in net income and profit margins suggests that the company faced challenges in 2025, resulting in reduced financial performance compared to the previous year. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from various sections of the report confirms this trend, with operating cash flow increasing year-over-year and exceeding working capital needs. Specifically, the net cash provided by operating activities has grown from $3,879 million in 2024 to $4,345 million in 2025, demonstrating a significant improvement in the company's ability to generate cash from its core operations. This positive trend is further reinforced by statements on pages 48 and 49, which explicitly confirm that the company is generating positive operating cash flow. The company's debt level has undergone significant changes. While the current portion of long-term debt decreased by $479 million and long-term debt, less current portion, decreased by $59 million, the total debt increased by $4,042 million. This increase in total debt is a notable change. However, interest expenses have shown mixed results. For the 3 months ended September 30, 2025, interest expense net decreased by $94 million. In contrast, for the 9 months ended September 30, 2025, it increased by $292 million. Additionally, interest accretion on landfill and environmental remediation liabilities increased by $7 million or 7% from 2024. Overall, while there are some fluctuations in interest expenses, the company's debt level has seen a significant increase. Management's outlook and strategy. The company is focused on adapting service offerings to meet changing customer needs, including expanding traditional recycling services and increasing organics collection and processing. Management prioritizes putting people first and delivering outstanding customer service while reducing costs through technology and automation. To drive growth, the company is investing in emerging diversion technologies and renewable energy segments. Recent acquisitions, particularly Stericycle, are also driving the company's outlook and strategy. Management aims to capture synergies through reduction of duplicative processes and costs, focusing on business integration and process optimization. The company remains committed to sustainability leadership through investments in recycling volumes and renewable natural gas generation. However, management notes that inflation creates risk and uncertainty in the financial outlook, but proactive steps are being taken to recover and mitigate costs. Acquisitions and divestitures. Overview. Waste Management has made significant acquisitions in the healthcare sector. The most notable acquisition is Stericycle, Inc., which was acquired on November 4, 2024. This acquisition has been presented as part of the WM Healthcare Solutions segment. In addition to the Stericycle acquisition, there are multiple references to the company being acquired in November 2024, further emphasizing its importance. These acquisitions demonstrate Waste Management's strategic expansion into the healthcare waste management market. On the other hand, the company has also made divestitures, including a minority investment in a medical waste company that was divested prior to September 30, 2024. This highlights the company's ability to adapt and adjust its business operations as needed. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, with $1,001 million distributed in 2025 alone. Additionally, the company has also invested in buying back shares, spending $262 million on repurchases in 2024. This demonstrates a commitment to rewarding shareholders through both cash distributions and capital returns. Supply chain disruptions. A growing concern. The company's financial summary highlights concerns about supply chain disruptions that could impact its operations. Extreme weather events and commodity price headwinds are identified as potential causes of disruption, underscoring the need for contingency planning. Furthermore, a specific charge of $152 million is attributed to temporarily suspending operations in response to changing market conditions. These factors collectively indicate a pressing concern about inventory buildup and supply chain resilience. That concludes the financial summary for Waste Management Inc. Feel free to comment below, and I will be happy to answer them when possible.